Do traders have a reliable sixth sense? Hey, very good evening to you traders. This is Mark. Welcome to your daily trading video. I was going to talk a little bit about some levels and bits and pieces, but I think we've covered those yesterday. You know, what I want to talk about is something which I may ramble a little bit on, so bear with me if this interests you, and apologies if not. But, you know, I was stumbling across an article this evening on CNBC that said, do traders have a sixth sense? And what I'll do is I'll put a link to that in the blog post or in the bottom of YouTube comment section, wherever you're looking at this. And you can go and read it for yourself. But ultimately, they summarise that traders do have a sixth sense, and they did some tests to confirm that. But it got me thinking today for this DAX trade that I just passed on, and I couldn't put my finger on why, and I sort of analysed it, and funnily enough, that article came in this evening, and it made me think a little bit more about the situation. So on a 1 hour time frame, let's just look at this, I'll run through it. So on an hour time frame, we know that we've broken through that really key support level from several weeks. So we did some work down there, and then we pushed back up, and we've kind of done a little bit of work up here. And the obvious trade from that is, once you've tested a low and you haven't brought in any sellers, going on the auction process type theory or the trap traders type theory, is that you're then gonna, when you break out to highs, you're gonna, you know, retest some highs, and it just sucks in a few, and you're gonna push back to the high of that range. And okay, ultimately that's what we did. But if we look at the first minute of the opening period, now one of the bread and butter setups that I trade, and that many traders trade this kind of thing, you know, is under the right conditions, is buying the first pullback. It's a beautiful trade setup. It's something that I think you can almost take mechanically, but I like to have a little bit of a filter in it. And for those who don't know about it, just some rules are: you can either buy on the first pullback to the 20 period moving average on a 1 period, you wait for a wick to form, or you wait for your downtrend line to break. I won't go into too much detail about the parameters, but that's the fundamental thing about it. And generally, if you get it at the opening, after you've had an opening drive, or you get it from some sort of volume expansion, it's a good one to take, because you're often going to get at least a retest of the highs. So if you'd have took that there, you know, you're talking that you've got a little 20-point scalp, maybe 30-40-point scalp on that longer term trade. And especially when you've broken out of the prior day's high. Here's the prior day's high, and especially, like I say, we tested below that key level, and then we didn't actually capitulate. So everything looks good for it, is what I'm saying. So I'm watching at the open, and we see the drive high. We push. We start to pull back. I'm thinking this is exactly what I look for. It's a bread and butter trade, but I just didn't want to take it, and I couldn't put my finger on why. And I thought, obviously, as we plumbled through there, and I thought, well, I've dodged a bullet there. You know, I've saved myself 1,200 euros or whatever I would have risked on the trade. But the point is, you know, I started to think a little bit more at the time of, why didn't I take the trade? What made me sort of go, I don't like it? Was it the drive? Was it the fact that we'd driven such a decent number, and it was actually quite a decent drive? And then I looked at the 15-minute chart and thought, well, there's not that much. And then I thought, well, is it because we had Fed yesterday? I've got Fed tomorrow, and I don't really want to buy any range expansion at the moment. I'd rather be buying at support, selling at resistance, because I'm expecting a contracting volatility in volume because of the Fed. I thought, yeah, maybe that was why I didn't take it, and I had a little bit of caution on my notes as well about that. Maybe that's a combination with the drive. But then, you know, I got to thinking, now, I'm interested to hear your views on this, guys, if you're watching this, and there's not that many viewers at the moment, but I still appreciate what your thoughts are, regardless of experience level, of how you trust your gut and listen to it and say, well, actually, I'm not going to take the trade. And then what times you say, well, even if you're fearful, you've got to take the trade because the setup is right. You know, it's difficult to tell what's right and what's wrong, and you know, even with you know, a decent amount of experience in the markets, you still get that sort of conflict of interest, if you like. So yeah, it was interesting, and obviously funny that the article came up on CNBC in this evening, and go and read that, and it is quite interesting to see. So that's what I want to talk about, is do traders have that sixth sense? I think we do. A lot of times it's saved me an awful lot, or I haven't been able to put my finger on why, but then something unusual has happened, and you wonder whether it's because you're taking all this little bits of information in and you're processing it subconsciously, and it's going, hang on, this is not very similar to what I normally see. I'm going to step back, and maybe that's what it is. I don't know. But anyway, Looking forward to Fed tomorrow. Bank of Japan tonight. I will be up and looking at it 4 a.m. should anything happen. If it doesn't, it's not the end of the world, but I would hate to miss anything if something kicked off. So I hope a great trading day. Looking forward to the rest of the week. Back with another video tomorrow. Take care.